The 1-2-3 trading strategy is a simple yet effective method used in forex and stock trading to identify potential price reversals. It involves identifying a trend and looking for specific patterns where the price makes 3 consecutive moves in the opposing direction, signaling a potential reversal. The 1-2-3 trading pattern is a popular technical analysis strategy used to identify potential entry and exit points in the financial markets. It consists of 3 distinct price movements that form a specific pattern on a price chart. The first movement is a trend in one direction, followed by a retracement, 2, and then a resumption of the original trend, 3. Traders use this pattern to anticipate trend reversals and take advantage of potential market opportunities. Identifying the initial trend involves analyzing the direction in which the price of an asset is moving over a period of time. Drawing the 1-2-3 pattern on the chart involves identifying a series of 3 consecutive highs and lows, with the middle peak, 2, being higher than the first, 1, and third, 3. This pattern can indicate a potential trend reversal. Understanding the significance of each point in the 1-2-3 pattern is crucial for making informed trading decisions. It involves identifying potential reversal points in market trends and assessing the strength of the upcoming trend. In technical analysis, traders often look for confirmation of the 1-2-3 pattern by using support and resistance levels. These levels can help validate the pattern's potential for a trend reversal or continuation. When the 1-2-3 pattern forms near a strong support or resistance level, it adds credibility to the pattern and increases the likelihood of a successful trade. Traders use these levels to gauge the strength of price movements and make informed decisions about entering or exiting positions. The 1-2-3 trading pattern involves identifying trend reversals and potential entry points based on a series of 3 consecutive peaks or valleys. Exploring different entry strategies for this pattern can include waiting for a breakout after the third point, using Fibonacci retracement levels for entry, or combining with other technical indicators for confirmation. Managing risk is essential in trading. Setting stop-loss and take-profit levels based on the 1-2-3 pattern can help minimize potential losses and lock in profits.